Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedgin Lee with a morning update for Bitcoin. Yesterday we left with this chart where the W, X, and the Y waves were being put in. These were subdivided, and they subdivided very nicely. A, B, C in the red. And the final C wave was 1, 2, 3, 4, and 5. Now we can have still 1, 2, 3, A, B, C, 4 down here, and then 5 is still going on. Right now, for that benefit of doubt, let's put it right there. Which means everything will shift to the right. Okay. So this also provides more of the sideways action orientation as well. So this red A, B, and C is being counted, and I'm sorry, 3 should be right here. Oh, hold on. No, we'll make this an expanded flat. It looks more like an expanded flat. So the expanded flat here would be A, B, and C. The reason why I called it an expanded flat is all of this so clustered and overlapping. It just doesn't look impulsive on the final 5. So if this is the top of the 5th, this will be the final 5th wave. So it'll be 1, 2, 3, 4, and 5. I'm sorry, 1, 2, 3, 4, and 5. Technically, it could still be correct. You can still say this, and there's, like I say, there will always be multiple ways of labeling this exact same price sequence in more than one way to label with Elliott Wave. So this is technically correct, 1, 2, 3, 4, and 5. But I believe that the expanded flat, which quite often usually comes during the mid stage or so, or the latter stage of a rising impulse trend. So it's pretty befitting as well. So we could keep it as is for now and say they should be one more rise. Make this white to finish the 5 of C of Y. Okay? And that could bring us to the 69.86 or so, maybe. Okay? Now there's another chance that this whole thing, 5 was here, we have 1, this is a 2, but usually a wave 2 doesn't go so vertical like that, usually. So this, I think, will probably turn out to be 1, 2, 3, 4, and 5. Okay, so we covered now the very short-term view. Now, do you see a pattern emerging potentially here? So to take a look at that, let's open up a new one. So here is a clean chart, clean slate. And if we look at this region, there is a potential for let's draw a line like this. And this will give a rather, not the most symmetrical looking, but still valid, head and shoulders. Inverted head and shoulders. So let's label it. The left shoulder will be this right here. The right shoulder would be this. And then the head will show as right here. So left shoulder, head, right shoulder. Not the prettiest looking symmetrical one, but at least the shoulder regions are pretty symmetrical. Just the head is a little bit screwed up, and a lot of people with screwed up heads too anyway, so. So let's look at the volume. So as you can see, the left shoulder volume comes up to here, a little bit lower than the head volume, which still passes. And the right shoulder volume is much less. So as long as, in this case, the head volume is the highest, I'll take it. Okay? So let's do this. Keep it in a rectangle. Oops. Like that. That. And the right shoulder volume. So we have, I think, approaching a point where the pattern is complete or near completion. Here's the neckline. Here is the neckline. Volume confirms so far. Now, if we get a sudden spike in volume that's much higher than the head, then the volume confirmation is invalidated. If this is correct, the final confirmation that I'm looking for is price confirmation. Now, I know some of the terminology that I use are not exactly the same as what everyone else uses. And you, over the years, I've just self-taught myself and come up with some of my own better preferred terms. So the price confirmation is what I call it. And I think it's pretty befitting, because then the next step for price confirmation is for the price to breach the neckline. Okay, so now let's do the minimum price 1 test. I go from the lowest to the head, above the head point to the neckline. I usually just use the purple color for something like this. I copy and paste because I don't want to do any math. I put it to approximately where on the neckline the breakout would happen, and that'll bring us to 7,600. Approximately. Now, these numbers are not projections, or targets are not being put out to say, hey, listen, it hit 7,600. If it does, then I can just pat myself on the back. No, I couldn't care less about that. This is just a guidepost to look at in a scenario of this type, with this pattern, what this would look like. Now, if I add my Elliott waves to this, it would be very similar to what I had before, that we probably will be, if this is correct, wave 3 will probably be up here. I had said before that if this is going to be a trend reversal event of some kind, then we need to see a darn good impulse sequence upwards. And this 7,600 probably will be wave 3. Quite befitting for that target for wave 3. So I wanted to share this with you. Now, some of you new people might be thinking, but hey, Gene, yesterday you said this. 3 days ago you said that. A week ago you said this. Yes, I did. First of all, you are absolutely correct. But it's easy to be trapped in a state of conundrum when you are trying to peg a call, for example, like this, and put all your money into this call, let's say, or put a trade into this call, and let's say it doesn't happen, okay? And if it doesn't happen, it goes against you, clearly this call didn't work. It was incorrect. It was wrong. Or more importantly, I think, as the price data accumulate, as new data and price accumulate, it would allow a technical analyst to have newer discernment of pattern, newer discernment of Elliott waves and indicators, so that if that new discernment requires a change in the prior markings, then so be it. That is the, how should I say, baseline attribute of technical analysis. Why? Because, unfortunately, technical analysis is not based on the principle of certainty. It is based on the principle of probability. And also, when you get that feeling of having made a trade because you followed someone's recommendation or analysis, and it went against you, because there will be trades that go against you. Believe me, that will happen, and if it doesn't, you're not in the right world. And those kind of trades have a lot of lessons to teach. But when that happens, when you get that emotional blame, tingling of annoyance, and you need to blame someone for that, then that is when the discipline has to come in. You don't blame anyone except yourself. You have to take full responsibility of all your trades, because that is, in my opinion, a greater level of emotional maturity. All humans have the natural tendency and the reflexive reaction, to project the guilt outwards. And that means that if they are not feeling good for whatever reason, they need to find a reason to project that feel, the bad feel, the guilty feel, or whatever that feeling, negative feeling might be, annoyance, anger, hurt, loss, sense of losing money. And they project that to any external source except themselves. And that allows a temporary relief. But that's just it. It's only temporary. It doesn't teach you anything. It doesn't benefit you anything. So as today's tidbit on that, that's something that you might want to consider. In fact, that to me has been one of the greatest lessons I've learned in my over 20 years, since 1997. And I'm pretty sure it'll probably be the same, one of the greatest lessons you'll learn as well if you are very new to this. And if you're not new to this, you know exactly what I'm talking about. So here is the alternate profile. And I think it looks pretty good to me. The only thing that could be better here is, the head could be more symmetrically shaped. But this is a valid inverted head and shoulders, which is bullish. And if we get a break out of price, the breach of the neckline, even better. Now let's take a look at so here again is a clean slate again. And I'm now going to draw lines across the tops. Notice how I cut this a little bit. This is just the way I do it. When I draw patterns, I do take some liberty of cutting out price wicks to have the pattern look better and fit better into the pattern. Yes, I do that. There are sticklers out there who will say that's a no-no, and if you do that, you're belittling the name of technical analysis. Believe me, I've gotten those kind of, you know what. Anyways, so here is a top line. Now I'm going to draw a bottom line. Okay. So we have potentially a triangle pattern in formation as well. However, guess what? Just because it's a triangle does not mean it has to conform to the Elliott Wave triangle of an ABCDE label. But it doesn't take it away. The triangle pattern, no, not at all. So here, if we put back let's keep it at now the impulse. Okay. Oops. If we keep it as an impulse, like just before, it would make very good sense that this price bar, the price bars, are displaying the labels of an impulse in motion. Okay. Now we could even change this to the WXY. I'll even add that in. WX, and let's say the Y. Okay. We can even label that in and keep that there. And that conforms as an additive label for this. We can even include the head and shoulders that we just talked about earlier. Okay. But the fact that this is a triangle also, while within this triangle you've got an inverted head and shoulder, to me that inverted head and shoulders would give more bias to the upside of this impulse count. Okay. But meanwhile, for now, I am going to still keep this as my primary count of the WXY, where we are doing the 1, 2, 3, 4, and 5 of the Y, or 5C of Y. Keep this as my alternate, the inverted head and shoulders. And now let's look at the wider scoped. I have two of them. Wider scoped view. Here you go. Here it is. So here, this is still on the table. However, this here could be the bottom, and we're going to thread back and forth along the lower trend line. I've already discussed that. But in the count of this aligns with this. If this WXY is invalidated by the head and shoulders, wonderful, no complaints. What I do have is a structured ladder, bias ladder already set up and in place with limit buy orders at below the prices. And if none of them gets triggered because the price goes up, I have zero complaints. Okay, it's almost like fishing. Sometimes you catch it, sometimes you get a nibble, sometimes you don't get anything. So I'm keeping this still as the primary, which jives with the WXY count until it gets invalidated, maybe by the head and shoulders, or really the same thing, symmetrical triangle with the head and shoulders embedded within it. And that's how I try to jive my short-term to my longer-term perspectives, have my primary on the table, which is actionable for me, which is why I've already cast my bilateral, but have the alternate cards close at hand for visibility and awareness. All right, today is a bit longer than usual on the video. I hope you found this to be helpful. I'm giving alternate counts, but that's what I'm being asked for. And for some of you, I know this is going to cause some confusion. Well, gee, you're going to say it's going to go up or down. Thanks, Hedgen. and I've already kind of warned of that risk. So let's see how this goes, me putting out alternate accounts with the primary as well. And if you have any questions, let's discuss on the discussion board. Have a good day.